All right. So, like I said, we're trying to put the whole risk management idea right? Because clearly it's very easy to
Yes, sir.
take $2,000 to 5,000 and 10,000 or 20,000 and so on. And it's very easy to be able to pull out $50 from this amount. So we're trying to understand how well you can put the odds in your favor in the long run. So I wrote this down, flipping and compounding. These are two different words, different methods. And in the sense, the first one flipping here is saying that you are scaling up faster. You're trying to turn $100 to uh $500. You're trying to turn $100 to $1,000. You're just trying to turn a small amount to a large amount in a short time. That is what's called flipping. So you know that
Sleeping.
yeah, it's one or two things. It's either you win or you lose, right? And there's some the whole idea of
Yes, sir.
leverage. Yeah, the whole idea of leveraging. Like we used to say, leveraging is a two-edged sword. Leveraging, right? And in this sword now, something like this now is a sharp sword, right? We have the two sides are sharp,
Huh?
very sharp in a sword, obviously. And it's saying that
Yes, sir.
one side can give you a lot of money by winning, and the other side can give you a lot of losses by losing. So you can easily scale up a lot of money because that's one thing that make forex market very volatile because of what? Because of leverage. That means your $100 can be able to pull out a lot of money. You've seen people go that $100 can give them like $10,000. Why? Because they are leveraging was that position on that $100. Meaning, if that trade goes wrong, what happened to the $100? They lose it all. Okay.
Gone.
Yes, that is why it's either a win or a
It is
lose. So
again.
you are flipping. You are just trying to see how far your $100 can stretch to. You don't want to do that on a big amount of money, right? 2,000, because obviously people stretch 2,000 to make 20,000, 15,000, 20,000, even 2,000 to 95,000. It's possible. But what is the idea? What is the fate of this money when you lose? You lose it all, right? Because it's like, oh, you are putting a lot of leverage on a position on this account. When it goes wrong, it is very easy to go from 2,000 to what to $20. Very, very easy. So these people that flip now,
Huh?
they have backup funds. That is to say, let's say you're trying to flip now, you have $2,000 now, you're trying to flip. From your 2,000, if you break it down into $100, that is to say you have what? You have 20 times to what?
Oh, sorry.
To flip. You put in $100, you over
Hmm.
leverage on your $100. The first
Yes.
one goes, you have 19. You go again, you put on that
Yes.
$100. The first one go, boom, you have nine, you have 18. Sure you get. Now, these people have what? They have backup funds
Yes,
because you
sir.
know that there's a lot of the you have 20 times the space to what to over leverage on the money. And that money they can still even have extra money in maybe extra 10,000 somewhere. But the whole idea is flipping comes with what? A huge risk. And if you are going to be risking on that account, you should know that you have what? You have backup, you have fund somewhere. Because
Hmm.
imagine the scenario now where somebody worked, let's say somebody worked like 3 months to get $100. Like, it's not easy in Nigeria where somebody will um, try to gather some kind of funds. You deposit $100 and you know that, oh, this is the only $100 you have. And you immediately over leverage
Hmm.
this $100. The moment you blow everything, imagine using 3 months to make this money and you lose everything in 10 minutes. What do they do now? They have
Hmm.
nowhere to fall
Hmm.
back on. You literally put money to trade and now you don't have
Yes.
money to trade and there's nothing you can do again till another 3 months. That is not the kind of mentality
Comes.
we come into the market to do. That is gambling. That is flipping. Now, compounding on the other
Hmm.
aspect now is the slow progress to riches, where you have $100. Obviously, it might be your only money or not, but you are trying to compound the $100 over time. That means time here now is the factor to how much this account can make. Now, in the $100
Yes.
now, we can say, okay, probably we are risking XYZ amount of money per trade. Let's say we're risking $5 per trade. And if we're risking $5 per trade, we probably want to be getting $5 or more, right? Because obviously, if we're putting five on the line,
Yes, sir.
we want to get five back or more. When I say or more, we could probably be getting five to get 20, five to get 30,
Or
and so on.
$30. Mm.
Mhm. So, but we know that our risk out
Yes.
of this $100 is five and nothing more, nothing less.
Yes.
So over time in a
Yes.
simulation where you have 20 trades to take. Now, inside that 20 trades now, that person can lose the first one, lose the second one, lose the third one, lose the fourth one. Then the fifth one, they make money.
Mm.
The sixth one, they made money. The seventh one, they made money. The eighth one, they lost, and so on. Right? I'm trying to simulate the possible worst case scenario of the sequence, whereas they are losing more than they are winning. It's still very possible for this
Mm.
person to still come
Mm.
out and make what money because of what? Because of
Money.
their standard risk and their what? Their
Mm.
standard reward and so on. Because if they are
Yeah.
putting five on the line, so let's say let's create a scenario now. Let's say five trades. In five trades,
Okay.
this person took the first trade, lose, took the second trade, lose, took the third trade, lose. At this point now, they have lost three times in what? In a row. I mean,
In a row.
yes, I mean, we can use it. So the simulation, first loss, second loss, third loss. Now, the standard risk of this, let's say the person has $100. Now, the standard risk per trade for this person is $10 per trade. They are risking what?
Mm.
$10 per trade in this account. So,
$10
yeah, the
per trade.
risk is what? $10.
$10.
Now, there's something called risk to reward. When I say risk to reward, you are either having a one-to-one, a one-to-two, a one to three, and so on. Now, what do you mean by one to one, one to two? It's saying that your one is your defined risk. That is why it's called a risk to reward ratio. Your risk to reward ratio. That is the
Ratio.
one. Yeah. So if your standard risk is $10, it is your one. So our risk is always what? It's always one in this ratio, one.
One.
So our reward now is not the one that
Okay.
comes in a one to one, a one to two. So our reward is multiplied, is the multiples of our risk, right? So if we are
Yes,
taking
sir.
a
Yes,
risk
sir.
to reward of 1 to 3, what does that mean? We're risking one to get what?
Mm.
Three.
To
So if the
get
person
three,
is
yes.
risking $10 as one, what will be their reward of three?
If it's risking $10 per one, then you get $30
Exactly, thirty
to three.
dollars. Okay, so that is the simulation for this now. Their risk to reward is what? 1 to 3. So let's go. So the first
Yes,
trade, taking the first trade, what happened to the first trade? Loss, right? So how much are we losing from our $100?
yes, sir. $10.
$10. Now you've lost $10 from this trade, minus 10. How much is our balance?
Yes, sir. $90.
$90. Okay. This is currently what we have now, $90. Okay. We go on again. Took another trade.
Yes, sir.
What happened? Minus 10. We lost. Okay.
Okay.
Yes, so good. We are losing now. All right. So our current balance right now is 80.
$80.
Okay. We are watching it go, but let's be keep our feet up. The next trade again, another loss. Boom. At this point now, the person is wondering what's going on, but okay, as far as my risk is standard, let's see how far this goes. Boom. Minus what's that I have what $70 left. Now, this is
Okay.
now probably where the
$70.
winning trade comes in. The winners come in and boom, they took a win of what? Of 1 to 3. And what is the three now? What is the three?
That's $30.
Exactly. What happened? What's our balance now?
It's back to $100.
Now, just so you see, do you see what happened here now? When your risk is standard, when you win, your win Just one win automatically has cleared all these losses. Just
Yes.
one win has what? Has cleared all these losses.
Find
Just
the
like
loss.
that. Just one win. So you are losing, 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 losing. But when you win, your win is able to cover for a tremendous amount of what of losses that was taken. That is, it's easy. It's very easy to recover. Okay, so now they are what? Plus 100. Now they are
Yes,
back to
sir.
what? $100. Now we made another win again. That will be what? And that plus what? Plus 30.
That's
And
$30.
and what is next? What is next on that account now? 130.
That's 130 to back to
Just in what?
137.
In 5 trades. Do you see
Mm.
how we just compounded $30 in 5 trades? Just
Yes,
like
sir.
that. So our $100 now is now what? Plus $30. Just like that.
Mm.
Without
Mm.
even over leverage. So imagine the
Mm.
scenario of 20 trades. Imagine the scenario of 100 trades. That is to tell you that if in 5 trades we can be able to make $30, now imagine 100 trades. We could probably be making about $500 later after 100 trades.
Yes.
That is a lot of gain, right? That's a lot of gain. So
Yes, sir.
depending on the balance, remember, depending on the balance, but we are compounding. This is the method of what? Compounding. But if it was
Compounding.
somebody that was flipping now, what do you think would have happened to this $100 at first? That just that first trade. What do you
You
think?
have been gone.
Everything has gone. Just
Flipping the $100 is gone. They
just like
won't have
that,
anything left to
immediately.
trade.
Now, even if the person was even risking half of the account, $50, half of your account has gone immediately. Remaining
Mm.
50. And the second one again, let's go again.
Very
Flip.
50.
In 2 trades, everything has gone.
$50
So the
again.
thing is, when you are flipping, you have that mentality that everything has gone. That is why people deposit a small amount. You see someone going $200 to 1,000, $200 to 20, $12,000, whatever. But the thing is, nobody would flip with their last money, and nobody would deposit a huge
Mhm.
amount of money to come and be thinking with the flipping mentality. Nobody wants that.
Mm.
So it is very, very, very
Yes.
good to regulate your because nobody is going to take this trade for you. You are the one that is going to say, let's buy, let's sell. Even if you are taking signal, you are the one that have access to your position sizing.
Yeah.
That is why I talked about the whole lot size. So the position or sizing, because obviously you can if you won, you would have been thinking of all the huge money you would have made if you had increased your lot size. Yes, you would have made a lot of money,
Yes,
true.
sir. Yes,
But
sir.
what if you took a loss? Do you think you would be working out with a lot of money? You'll be losing a lot of money too.
No, no,
So
you're
as a
losing a lot
trader
as well.
that is well educated in risk management, they think about what? They think about their what? Their risk first. What am I losing if this trade goes wrong? If I am losing $100 in just this one trade, am I okay with that? That's the question. If you're not okay, when you lose it, you'll be sad, you'll be angry, you'll be questioning yourself, say, what is going on? Because you did not put your mind to lose this amount of money. Now, imagine a trade where
You
this
lose that
person will
amount.
even put stop loss. Now, there is no stop loss because they are thinking they are wise. Initially, you have the mental capacity to lose $100. No stop loss, your price is below $100. The next thing you're seeing minus 200. The next thing you're seeing minus 300. The next thing you're seeing minus one.
Mm.
At this state now, do you think the person now will be thinking properly? Because initially you wanted to lose
No, we're having
$100.
abnormal thinking.
Yes, because at this moment, you are losing way more than you even planned because there was no stop loss. Now your mind start telling you, let's not close this trade. We can make it back. Let's not close it. And you are now thinking emotionally, and the next thing you are seeing minus $600. What's going on? And if this person had $1,000 now, instead of losing $100 to have 900, they are now having what? 400 left.
$100
Do you
after
see?
losing 600.
Yeah, exactly. So the only thing you are capable
Makes
of is
sense.
what is controlling that risk.
Mm.
So we are not trying to, that's why they say it's never a get rich quick scheme. You make money, you lose money, but it needs to be what regulated. Now, what you now think is, let's compound. How well can we scale this account from X to Z? How well can we scale this account in 3 months? How well can we scale this account in a month? Doing what the right thing. When you want to flip is when you
Mm.
play. Because, oh, I mean, the forex market is boring. I mean, when you are risking standard, it's boring. But when you are looking for adrenaline, okay, let's put $50 and see how we can take our $50 to 500. Possible. But when it goes, no wahala. But somebody with just only $50 cannot do this thing. I mean, most of them are lucky that they go 550 to 500 and they will tell you it's their last cash. Lucky you. But what would have happened if this trade go wrong? Yes, we need to be,
Went wrong.
you need to
Mhm.
be a risk taker and all of that. Yes, that is why I say take calculated risk. If you lose this money, will you be okay? Is this money your rent?
Mhm.
Is this money a money that you want to use to do something else? You don't do those things because you will not be thinking properly because you will be scared to lose the money. Even if it was calculated, when you lose, if you put $1,000 and say, oh, this is the money I want to go and use to do something, but let me just, by the time you see minus 200, what is happening now? You are not thinking properly again because you're like, hey, I was not supposed to put this money, you start thinking. But when you know the risks to reward, I know that, okay, you are not trading the wrong way. You are doing the right thing. You are just letting what? You're just letting probability what
Yes, sir.
play out. You're just letting the sequence play out because in the end, you'll make it back. Then you start thinking strategically,
Yes.
you start thinking without emotions. Because when you take
Mm.
those losses won't phase you. But when you start over leveraging, and the next thing, all your head will just start scrambling. That is where most of the bad decisions are taken. And you will not realize that you've lost almost everything. So these are the traps that you don't fall for. And this even points into psychology. If you are stressed, if you are probably having a hard time with someone and work, whatever that is making you feel a certain kind of way, you stay away from the market because those things will influence your decision making, will influence, because you're like, oh, you probably lost money somewhere else and you enter Forex and like this market must make this money I lost back. Okay. When you start
Mm-hmm.
that,
Might lose everything.
I've had
Mm-hmm.
experiences. So in the end, you will still experience all these things. So the thing is, experience, like they say, is the best teacher. But when you experience things like this, I don't want the case where, because you hear people telling that story. I lost $6,000 trading forex. I lost $10,000. I've lost a lot of money. Yes, they lost a lot of money. But those lessons that would have cost you probably $60 or $100 or so a small amount.
Or $50. Yes, or
Yes,
200.
yes, you went to lose
Yes.
6,000. And the next thing they tell you, Forex is scam. I cannot do this. I beg, I'm staying away. You've scarred yourself because initially this money is even too big. Some of them don't even learn that lesson that money, that experience taught them. And when they deposit again and they lose money to that same mistake. So every mistake in the market is what? Is a
Hello?
lesson. Can you hear me?
Hello?
Yeah, I can hear you. Can you hear me?
Hello?
Hello? What's happening? Can you hear me?
Yes, sir.
All right. So you see, So I think one day we're going to talk about psychology too, and the kind of psychology that affects we as trader, fear, greed, FOMO, and so on. So this experience here was just to tell you about risk management because you cannot go anywhere without it. So when you risk properly, then that way you know already what you will lose and you know what you will gain. That way you are just letting what the sequence play out in what in 10 trades,
Mm,
in 20 trades. Because if you start letting one trade define you, because imagine taking one trade and lost that one trade, and you're like, oh, what's going on? What's going on? Try thinking what in longer term, because one can be loser, two can be loser, three can be loser. But how about 20 trades? How about 50 trades? And then again, the next thing I
but
mentioned,
now
the
50 times, that means you can't lose a 50 trade at once.
exactly. Then again, everything
So
still
at least
depends. Everything still depends.
even in 10 trades or 15 trades, there might be some
Yes,
winning there. They
yes,
have to recover those losses.
yes, yes.
Yes. Yes,
So,
I understand, sir.
so strategy. In the end, it all boils down to strategy, right? Because when we talk about strategy, is the
Yes, sir.
strategy that gives you an edge in those probability. Because if the strategy is not good, you can still lose 50 times. You don't know what you're doing. So you get. So strategy
Mm,
gives you an edge
okay.
to allow your winners play through. Like saying in 10 trades, you have 6 wins and 4 losses. First, in 5 trades, you have 2 wins and 3 losses possible. You get, so it's a mixture of both. Because if the strategy is good, then the edge should just allow you what stay afloat over time.
Mm,
Sure you get. So that's the
mm,
strategy that you can still lose 10 times in a row. Definitely they happen, right? You can still, that's still strategy that would, I don't know, but I'm pretty sure that strategy that people will lose 20 times. Very possible. That one you just do that the win rate of the strategy is poor and is bad. That means something is wrong somewhere. But if it's the right way, at least you know that in the longer run, you are always going to make money. That's why they say, that's why when the risk is set, when the winners come, it's able to clear the losses. Because imagine losing $300 in the first trade, losing $200 in the second trade. But when you're winning $50. Why? Why? Because
mm,
there's no defined risk and there is no defined profit. Do you understand? The first trade you lost
mm,
$300 because you enter one lot size. The second trade, you lose $200 because you enter 0.5. Yeah, when it's time to now make winners, now you're not entering with 0.10. Why? Does that make sense? It's because this person is
no
not defined. This person does not define their what? Their risk. Because if everything is scattered,
risk.
it's like saying the same lot size that made you lose $300 is not the same lot size that is giving you profit because you have reduced it and you're not making $50. Why? In this case now, fear probably crept in because the first loss from a one lot size, 300, that's okay. Let me reduce it to 0.5. You're losing 200. Let me reduce it to 0.1. The next thing you're making $50. How will your winners cover the losses if everything is not
Mm.
defined?
Because he
Ex
has reduced the yes,
the position, he has reduced the position sizing
the
now because
positions,
he's
yes,
scared.
and even the amount, yes, the lot size has reduced the lot size.
Exactly. But when everything is standard, when everything is defined, at least you know that even if you are losing $300, when the profit come, you should be making what? 200 above, you should be making at least 250, like
Yes,
enough to be able to cover
yes,
for the
like
losses.
900. Yes,
Yes,
to cover
exactly.
the losses
900.
at once.
When you win 900, when you win 500. because it is standard, because the same lot size that took minus 300 from you is the same lot size that is giving you what? Plus 900, because
Or
the losses
900.
will be small and the win will be bigger than the losses.
Mhm.
So everything needs to be regulated. At this point now, you're not trading with emotions, you are trading strategically, you are trading with what? With a plan. That is how it's done. So most of the time, risk management really affects a lot of people because when they don't know something like this, they just start pressing any lot size that comes to mind. If they see plus $2,000 today, they're happy. Tomorrow they're seeing minus 4,000. Tomorrow they're seeing minus 3,000. And they're like, what is going on? Is it the strategy that's the problem? Probably not. Probably just the way they are handling it. So in everything, there is what? There is trade management, even handling the trade as it's running is one thing. Trade management. And there's what? Position management. There's also always risk management still. Risk management, yeah. Okay. And there is what? Position management.
Okay.
Position management and also emotion management. So you see, this is everything everything here is to what? Into the trading. So you might be okay understanding risk management, but you handling the trade management is not straightforward because why? Your emotions is all over the place. Your emotions might not be all over the place, but your position is too big. You're not positioning your trade properly, wrong. So everything needs to be what? Intact. You get everything needs to be
Hmm.
balanced to have an idea from each of them. That makes up you as a person, as a trader, that is what's consistent. So if you have no idea in topics like this, if you have no, and you will just be everywhere, you will just be scattered, you'll be wondering what's going on. So the
Yes.
strategy working. So
Yes.
at least when you
Yes.
now know everything, you now be able to handle your trade properly, handle your risks properly, handle your positions properly, and how to handle your emotions properly. Everything makes up you as a trader. So these are the mistakes that a lot of people don't know, and they probably find out after they've lost a lot of money. I've lost $10,000 trading. And then again, like I said, experience is always the best teacher. You would learn these things also on the go. But then again, when you are learning them, you are not learning them that they are taking a lot of money from you. You are learning them, they're probably taking a small amount. At least you know now why you lost that money. Oh, your mind was not right. That's why you lost that money. That will not cost you a lot because you've heard it before, and that has put you in the right position not to make those losses become what a very huge lesson
Hmm.
to you.
Hmm. Yes.
Because
Yes, sir.
some people will not hear word until they've lost a lot. That a lot would have scarred them, they would have wounded them
Hmm.
and say, I will not repeat this
Yes.
mistake again. Because why? They've lost a lot.
Yes.
But if they don't lose a lot, they will not hear word.
It's just like someone that you are showing the road. That this is where you have to take. But he
Mm-hmm.
said, no, I can take this way, the shortcut. Then
Exactly.
after he has gotten to the end of that, you see that there's no road there again.
Mm.
Then for him to come back, he'll now be, okay,
Now,
I've made a
they say,
mistake.
for follow
And
you that time.
mm,
So some
can
people will
follow
not learn
you.
until
Mm.
it has happened to them. Well, and
Yes, sir. Yes.
there are some still that will not still learn. Even after it has happened to them, they will still repeat that same mistake. And there are some people now that they will take advices from
We
people
take
that it
as a
has
lesson.
happened to so that it doesn't happen to them.
Yes.
And when it's happening to them, they are able to be able to reposition themselves properly. Three type of individuals.
Yes,
So
sir.
it all depends on you to know where you want to position yourself in life. So you understand. So probably we have more
Yes, sir.
sections. At least this is what I want to pass out to you so that you understand properly. You will ask questions. Make sure that you always ask questions because there's no shame in anybody asking questions. It shows that you are.
No, there's no shame there.
Yes,
There's
so
no
because
shame
in the
there
end,
because
when
it's
you
good,
lose money,
it's even good to
it's
ask
for yourself.
questions.
So those questions will help you
Uh-huh.
put you properly and escape
Well,
those
well,
traps.
you You have explained all this to me.
Yeah,
Before, I was even thinking it was like, because the money is the thing that I've been saving somewhere, the deposit I've been saving somewhere, that okay,
yeah.
when I want to start this thing, I must have a capital as well. Because I've been watching people on Snap, their post, other stuff, like the way they are
Enticing.
flipping money and
Mm,
winning. So they are flipping, and I said, okay, even if I don't have what it takes let me have something.
mm,
Before I now got to this opportunity that okay, let me this money I've been saving for a long time, let me now put it in it. So now that I've seen that flipping is very bad, I
yes.
will now take myself down to the compounding level
Mm,
because I think the compounding will be okay for me because
yes.
it's not that I cannot start afresh. I have to minimize the money
Yes.
steady by steady. So
Yes.
now that I have credited the account, like I want to ask, is do I have to wait till when I can start stocks
Okay.
or when or
So, so
how can I get
for you now, I think you should just I will give you the lot size breakdown for you because apparently you need to know
yes,
how
please.
well your the lot size you're going to be using and how well it's going to be affecting the accounting, the losses margin and in the profits margin as well. That is to say, oh, you're going to be taking if you're going to be taking trades, this is how your losses are going to be, this is how your profit is going to be until you start getting a very clear understanding. Because even people, some people will even use 0.01, that is the lowest, definitely possible, but there's still, it's
I
just
know that is the micro loss.
yes,
That's
yes.
0.01 is the micro loss.
So,
And now for
mm,
me as someone that is even just starting, I'll even start with that micro loss
mhm,
at first.
best.
Because someone that is just learning, you have to learn with all those things
Mhm. And then again,
before even
builds
if
your mentality, builds your mindset so that you can now start handling the profit and the losses that is coming. It's not shaking you, it's not
yes,
taking you off balance, it's not
yes,
making you start overthink.
yes.
It's just like a steady glide into the lot size that you now become comfortable with.
That, can I tell you something that this I watched a post on Abi Forex
Mm-hmm.
when he said if you have 5,000 in your account, you can join this. That's about his last year. And
Yeah.
that's when I've been trying to save this penny in
Mm.
my wallet just to be saving it, to be saving, to be saving, up
So
to
that
where
you
I
can
can jump up
join.
to this 2,100 and something. So now that I've been taking my time to save that thing, I've even wanted to join this class, this Dr. B's class in the
Yeah.
I like say around that June or July classes that I said there was an offer outside there when he was saying that 70,000 naira to join them. Then that was when I wanted to join the class. But I was thinking, okay, wait, let me this my money, the capital I want to use for this. Let me save more and see if it's something that I can. So now that I've saved a little now, with the little that I've saved now, if I want to start, can I start buying now? Because I don't know how to if I want to buy like the lot size. I'm using the
Yeah, yeah,
micro
I'm going
lot,
to explain that to
and
you.
I don't know.
That to you. I think
Okay,
we're going to have
okay,
a different
okay,
session for that. But for now, I think I want you to finish
okay,
your
sir.
classes. For now, I think that this just round up this month, then and now when you're now going to implement
Okay.
and now start getting money. So we're not trying
I
to
will.
rush. We
Uh,
just need that okay, this is where it is. It is
uh
there somewhere for you to know that okay, when you start, it is easier. So we're not doing anything now until next month.
okay. Thank you. Thank you.
And even towards,
Thank you.
and
No
then again,
problem.
I think once next month is coming to an end, it enters December. I think during the holiday period, nobody trades because I mean it's holiday period, so nobody's gonna be doing much work until next year. So at least by November ending, everybody should be packing up. I mean, it's not like trading does not happen during the December, but I feel like there's a lot of
No.
noise. There's a
But
lot of
vacation and
yes,
holidays.
things will not be
So
moving
yeah,
as
I know.
much.
Yes, now because during once it is November end, November, all stores, all schools, all
Yes,
everybody closes.
yes,
So there will be vacation. The people will not be available for jobs. or for any trade like that. I
Exactly.
understand better, sir.
So
I
by month end
understand.
into January and November, would talk about how you can start. So for now, just learn.